Hey everyone, welcome back. Thank you for taking the time to join me on this GameStop weekly recap for Friday, September 12th, going through our price action for the day, discussing our borrow rate, utilization, cost to borrow, discussing our options. Finishing the week just under 25 is big news, potentially throwing us into a spicy week upcoming. The 24s in the money already. 25s, you'll have to call your broker to exercise those. They're so close to being in the money or at the money that it is definitely worth it because it is a lot of volume of forced delivery, which would be awesome. So we're going to go through that as well as the rest of the option data. What does the chain look like? We have an ETF hedge rule change, discussing the implications of this. Our warrant checklist, I want to drive that home, make sure nobody misses that. And again, discussing the exercise mechanic and how that affects liquidity, not only within our warrants, but the options chain as well, as that was a really big part into January 2021, right? And then, where does this take us Monday? And of course, we have some news, I guess. Noon deletes his spreadsheet and also, I think, deleted the whole channel as well. It's gone entirely. So that's interesting. What's going on with that? I'd love your opinions there in the comments below. So let's talk about it, right? The price action today was not really here, right? Just trading sideways. But on such a pivotal day, when there were so many options expiring at 25, literally 30,000 of them, them having it there and not getting it further below is really a show of strength into next week. And then of course, the 24s, just under 15,000 here, and the 23s, almost 11,000, all in the money, which is really great. The puts get fried here as well, which we always love to see. And we do lose some as well. Our 30s don't make it, and really the 26s hurt a lot. So there's a lot of volume there that didn't make it through. However, I think it'd be worthwhile if you held the 25s, you had the cash, to go ahead and exercise those, considering where we're at on the timeline as we're looking to squeeze short side liquidity, right? So just trading sideways on the intraday is really good. The fact that we're not down lower on a Friday sell-off is, I believe, substantial. Zooming out from there, we can check out our 4-hour, and we have our reversal set, key level breakout holding, and trend retest. So, where we go from here, I would assume fill the gap next week, which is awesome. And then on our top screen, we have our one-day chart, where we still have this bullish breaker block holding. And then, our EMAs are going to play catch up. The 21 should cross over the 50 next week, Monday, Tuesday. And, as long as we can hold the 200 as support, just kind of bounce off there. Maybe if it slips under, we hold the breaker block and get the reversal, and then see that expansion upwards. And at that point, it's kind of a different game, and we'll go from there. But I definitely think it's in the cards, which is nice. Not much really happening today. More so just holding our support levels into next week. Then we have our borrow rate climbing, right? So we're up to 0.54. Just a couple weeks ago, we were at 0.38, right? And our shares available decreasing. Something that we do expect. We see the short interest climb. Not short interest, but short sale volume. Yesterday, this spiked. So something that we would definitely expect as those shorts needed locates, right? So taking that out of the lending pool, and the less there is in the lending pool, the greater fee we would expect to that. There's still a massive rebate here, but it's day one, right? Just eyes on into next week. I'm sure there's lots of people transferring their shares, so a lot of brokers, are going to pull back their own lending and That should increase the cost to borrow as we move forward. Again, we need to wait for that. Um, aside from that, utilization up, borrow rate up, cost to borrow rate, or cost to borrow. Looking for that in the future. Sorry, I have like bullet points just so I don't get too off point here. The options and the gamma for next week is really going to depend, I think, on whether or not people exercise here this week into next week. And looking at the rest of the chain, there's still quite a bit here. And us holding 25, I think, is substantial because that's right where we're kicking off next week. We're starting off next week with all these 25s, and if they can't push us down next week and we do hold, then lots of room to 30. Our next anchor point here. So that looks really good for next week. Moving out, some new dates being added, but we're at 25 next week, and then we have a massive chunk at 26. So kind of working our way up in a staircase, if you will, and then a bunch more at 25. So it's nice that we have these different strikes clustered so heavily, but in different expiry dates. So it's not easy just to flip the hedge one week and then, melt down. And I think that's a big reason as to why we still held the levels we did today, right? Because there's so much still on the chain in the future, right? A massive chunk of 25s here. And then October 17th is the big day, right? For 40,000 of these over that 41. A lot of 25s too, right? So even though we're post earnings, typically you see the chain just fall away, right? It's still there, right? And it even looks to be building a little bit, which is quite interesting. So if we can continue moving up even $1 every week, that continued pressure is nice. People can keep exercising. If they don't have the cash to exercise, roll out, but keep that pressure on the chain. Maybe you go a couple weeks out and then just kind of keep it at the money, right? And wait for the bigger move to happen while maintaining your exposure to the options chain. So yeah, the fact that we were able to hold it is great. Monday, if we can continue to hold it, we're definitely going to go up higher to 26, 27, and then if flow can build, a run to 30 is definitely not out of the question with the the current options sitting where they're at. Looking too far forward at this point, I don't think it's too relevant. We could go as far as the Januaries, which they're still here. People are still interacting with them. The 25s, the 30s, I like that. Someone maybe hedging with some 20 puts. A lot on the chain. Ignore the 120s. It kind of skews the rest of our information, but you can see that even with the influx of volume here, it's not dwarfed as it once was. If you're paying attention, last week, a couple weeks ago, whatever, you couldn't even really see these spikes because the 120s were so high. But as we continue to build volume on them every day, they're becoming more substantial, which is great. And again, here's another good example of that long-term staircase support into the future, not just at weekly expiries. So, they pin it under, melt it, and it's done, but it's next week as well. And now we have a bunch of the chain in the money being exercised, which pushes us up for another week, and it can kind of compound and cascade from there, right? So a lot of 20s, a lot of 25s, and a lot of 30s here on those leaps. And good support. Just checking it every day, making sure it holds. It's boring stuff. It's not important at all. But this is my routine. This is what I do. So happy to share it with all of you. Still on the warrants, we see, and I could be incorrect on this, but the narrative's there that you can sell one warrant to cover the exercise fee on the rest. I don't think you should sell any warrants. In fact, I think you should be buying them if you can, keeping them out of the hands of the open market is the name of the game because that's where they need to go, the short side, to locate them, right? So as long as they don't hit the open market, it's going to drive the price up. And if you continue not to hand them over, then they're forced to hedge that with GameStop shares, which is again a feedback loop that we now have that shouldn't technically end until the date approaches, or they do satisfy their locates, and that the hedge can flip, right? So I don't like that idea. I would do literally anything else to, like, I understand that exercising your warrants is going to take some capital, 10% of your position. Um, you know, what are you doing day to day, right? I'm sure you have a job. Uh, there's other ways to make money within an entire year that you have. There's plenty of heads up here. Um, there's just so many things that you could do that aren't selling that specific item that's tangible to our success. Yeah? That would be my absolute last option. And at that point, wouldn't it even be better, just for discussion's sake, wouldn't it be better to sell your rehypothecated shares, your phantom shares, and still hold on to that warrant, which is of limited quantity? Uh, just food for thought. I don't like the idea of selling warrants at all. Again, this is all very new to all of us. My understanding and perceptions could evolve as I learn new information, but that's where I'm at right now. I would even go as far as saying that we should try to buy more of them in case there is anyone selling them, right? Because we don't want those out there. We want to hoard them on the long side of the trade, right? And then the checklist, if you've not done it, right? So you need to confirm that your broker is going to support the warrant dividend. If not, you need to get that transfer going right away because we have like 3 weeks. Transfers take 2 to 3 weeks. You need to get going. Turn off your share lending. A good excuse for them to say, oh, sorry, we couldn't deliver you your warrant because your shares were lent out and they got the warrant instead, right? Or something like this. So make sure that's off. Round your shares up to the nearest 10 before the record date of October 3rd, and then confirm your receipt on distribution date of October 7th. If not, this is where things really get messy because in theory, all of it's legit and it gets passed out, no problems happen. However, also in theory, potentially there's a bunch of rehypothecated phantom shares out there, and there's not enough warrants to go around, and now not everybody's getting them. It exposes holes in the plumbing or a flaw in uh, the locate system. I don't necessarily know how it's going to fold out, and maybe at that point there's lawsuits that have to take place because you have the right to this warrant, but your broker couldn't deliver it to you. So like you as an individual now have to like go after your broker. I'm not an expert, so it could get messy, but not for those in computer share, right? They're going to be guaranteed those warrants without any of that trouble, which is great. You can exercise them from computer share, which is awesome. We don't need to sell them, so that's fine. You don't need to worry about that anyways, I don't think. Again, this could evolve and change, but that's currently where I'm at. So make sure you get all that figured out, right? That's going to be really important as we approach October 3rd. And just since we closed above 25, a lot of the 25s finished out of the money. So fewer auto exercises today, which reduces the immediate share delivery pressure. But into October 3rd record date, anyone with in the money calls who early exercises into shares to be a shareholder of the record will add real shares in demand, and it's going to tighten the borrow, right? So more shares for you equals more warrants for you, and also forcing their side to deliver, which is nice. And we're at T+1, trading days only, and it's the weekend, so we'll see how this all bakes out for us next week, because we don't know the percentage, because obviously not everyone's going to exercise it all, but hopefully it's a higher percentage than normal, considering where we're at on the timeline, right? If there was ever a time to do it. Like, I get the argument, why would you exercise today at 25 when you can buy tomorrow or Monday at 24? Well, I mean, they're the way that the shares are delivered is a little bit different there, right? So moving on anyways into Monday's setup. Fresh week, fresh flow. Weekend theta has ticked down on the chain, which isn't great. It's going to take quite a bite out of our options. But the borrow rate is up, and that pressure doesn't decay, right? So, both sides kind of feeling the pain as we walk into the event, right? Chain wise, keep an eye on the 19th and the 26th in the 25 to 30 band, and then October 17th for that 30 spike as well for potential support if we can clear it, right? Because acting a little bit as resistance on the way up, but if we get past it and those flip in the money, it could be a massive chunk of support. And we've had a floor down at 22, 23 for a while. Wouldn't it be nice to have the floor at 30 for a while as well? And then, maybe we're spiking up at high 30s, 40s for our, foreseeable future. And then, we walk the floor up again, maybe. We'll have to wait and see. It's a long journey, but we're going to be here for the entirety of the process, which is exciting. Noon deleted his YouTube. And the spreadsheet's gone, I guess. People were talking about that. I was never super into this. Again, I'm learning as we go as well. I was under the assumption that swaps were hidden till 2025 and then were re-hidden until 2028. However, that is just that's just the reporting summaries of the swaps, which makes it easier to identify and parse. However, the raw data is still there. So if you could go through it, identify the specific parties, stock IDs, and it is fragmented, so it would take quite a bit from what I understand, which apparently some people have already done. Maybe that could be of some importance. So I would also love your opinions on Newton's spreadsheet. It's not something I ever paid attention to. I will be honest. To me, I classified it as a wild goose chase. I spent my time focusing on technicals and learning how to trade. That's why I can do the daily trade reviews as well. And, very confident with my skills on that. And that's what I spent my time doing personally, instead of chasing down these swaps. And, it's always easy to say, oh, no, what I'm doing is right, what they're doing is wrong, right? But, maybe this was right as well. I should get off my high horse immediately, relying on you guys to keep me on track as well. Because obviously we're all just looking for the best, right? So if there's something here, you think there's something here, let me know. Maybe we can continue to dive in. I got a lot of time on my hands, right? And an extreme passion for the subject. So, we could definitely carry that torch forward. Some people sharing copies of the spreadsheet. I've honestly never looked at this. I would have to go through it all. And relearning it secondhand might be a little dirty, but I think that I could potentially do it. And maybe with some of your help, maybe some people know what's going on here, at least a little bit. We could have a conversation and get me up to speed, and then, I can take it forward. Or just pay attention to those who are. I do love that. That's what's so great about the community. Everyone doing their own part is awesome. Like even just the sharing of this data, for example. We have our utilization up, the borrow rate is up, the lend pool is down. So, it's just everybody does a little thing, which is fantastic. And then we put it all together as a community, which is awesome. The ETFs, talking about that, it used to be just swaps they use for locates. Now they're using any financial instrument. So that is going to relieve the burden a little bit on them. So we're trying to squeeze liquidity. They're now trying to, and immediately so, which again makes me think that we're on something. So it's like the influx of sell your warrants and then immediate rule changes. Like, oh, what's going on here? To try to make it easier on themselves, which is fine. You guys do you. We'll exercise instead, right? So really important to be doing that, not only with your option contracts as they go in the money, or at the money. I think that's important as well, but also our warrants as we get those in the future. So when we exercise our warrants, we're basically deleting them, right? We're taking them to GameStop. GameStop takes it, rips it up, gives you the share instead. It never gets into the shorthand, right? They can't ever do a locate or deliver with it. It expires worthless in your name. They don't ever get their hands on it. You sell it, they get it, right? So just that's my viewpoint here. The spreadsheet, we'll take a look at that, try to dig into it more. The options chain was really good this week. Like, I thought for sure, 23.90, get these 24s out of the money as well. Not only kill the 25s, which they almost didn't do because they were at the money, but get the 24s as well. And $2 above max pain is substantial, right? We are at 25 and max pain 23. So getting a little bit more bullish here, which is awesome. And, I'd love to fill that gap next week and maybe use the upper band of the gap as support moving forward. So to wrap up, I guess that basically was the wrap up. And yeah, I'll share the links because GameStop, and I think I forgot it in the last video, GameStop has a fact for the warrants for you guys, just to check that out if you're interested. And yeah, maybe we'll do something on the weekend as well. We'll go through an indicator. The channel's had some really good traction, and that's awesome. So like whatever you guys want, let me know. I'm happy to sit down. Even if I don't know it, I can research and learn and then come back and we can all discuss together, right? So cheers. Have a magical day. Leave a like, drop a comment, subscribe to the channel, and I'll see you all soon in the next